Bitcoin continues to reach new highs, touching $107,000 on Monday, December 16th. This comes after President-elect Donald Trump confirmed last week on the 12th that he will carry through with his plan to implement a Bitcoin strategic reserve. There's also rumors of Russia implementing a Bitcoin strategic reserve. We'll talk about these pieces of news and how it may affect the price of Bitcoin and other asset classes in the short and medium term. Matthew Tuttle joins us today. He is the CEO and CIO of Tuttle Capital Management. He's had over 2 decades of experience in asset management, and his fund has designed several ETFs. Welcome to the show, Matthew. Good to see you.
Hey, thank you for having me.
I'd like you to respond, please, to the recent price action of $107,000 was the latest high on Monday for Bitcoin. What do you think prompted Bitcoin to rally to above $100,000? Was there a specific piece of news? I mentioned the Trump announcement to implement the actually carry through with implementing the Bitcoin strategic reserve, but was there anything else?
Yeah, I mean, there really is a lot of things, and it's all kind of built on itself. So I think the first thing was the approval of a spot Bitcoin ETF. To me, that was a game changer because, before that, old guys like me, I mean, we weren't going to open up accounts on any exchange or have cold wallets or any of that. But a Bitcoin ETF opens it up to everybody. Brokers are now recommending it, saying it should be a percent of your portfolio. So you've got that. You've got, Trump and his whole administration being rabidly pro-crypto. And then you've just got the fact that $100,000 level is so psychologically important, it's going to act like a magnet. So, any news like a possible Bitcoin strategic reserve, and we break through 100,000 pretty easily.
You have invested in Bitcoin, correct?
I do. Now, me, I'm an options guy. So I buy options on the ETFs. To me, options provide, fixed known risk for investing in Bitcoin, but it is a core holding for me. I'm a big believer in it.
Are you worried about a short-term price correction from current levels?
So you're going to have that. That's always going to happen. Whenever anything has a parabolic up move, it always has some sort of correction. So I'm not worried about it if I'm a long-term holder. And it would be something where I would be looking to buy the dip.
Do you have a price target that would make sense to you?
So, Bitcoin is hard from a price target standpoint. It's not like a stock where you've got earnings and a multiple of earnings and all that stuff. So I like to look at the charts. This $100,000 level is now extremely important. Psychologically, that's going to now act as support. You would hope if you're bullish that it stays above it. If it breaks below it, short term, that's going to be bearish. But, on the upside, where it could go from here, that's anybody's guess.
I'd like you to take a look at my screen here, and we can react to what Donald Trump said about Bitcoin and his crypto policies. Take a listen to this.
So very different from the previous administration. Strategic petroleum reserve like for crypto?
Yeah, I think so. We're going to do something great with crypto because we don't want China or anybody else, and not just China, but others are embracing it, and we want to be the head. We're going to be ahead of AI. We're going to be way ahead of AI, and we've got to produce tremendous amounts of electricity. You know that it's unbelievable when you think that we need more than twice what we already have. If you think that's pretty for a specific industry, but we'll be able to do it. We have Lee Zeldin in charge of the environment. He's going to be giving us very strong approvals, I think, and he's going to make sure everything's good and clean and proper, but he's going to give us very fast approvals.
Natural gas.
How is the implementation of the Bitcoin strategic reserve going to work? They're not planning to buy more Bitcoin, from my understanding, right? Or maybe they'll change that?
I think if you're going to have a Bitcoin strategic reserve, that means from time to time, you're going to be adding Bitcoin, just like we've got a strategic petroleum reserve, but the difference is on the strategic petroleum reserve, we'll put oil into the market when the oil needs it, and then we'll add oil when we want to add oil. Here, I can't imagine a situation where the government would want to sell Bitcoin. To me, this is bullish. I think you're going to see other countries do it. I also think you're going to see companies doing this instead of holding all of cash. They'll also be holding some Bitcoin. So, all of this is extremely bullish news as far as I can see.
What's it going to take for Bitcoin to 2x from here, which it's done in prior cycles?
The groundwork has been laid. There's nothing holding it back, just except, the way assets move. You don't go from 100,000 to 200,000 overnight.
Yeah.
But if we're sitting here doing this podcast again next year at this time and it's at 200,000, I wouldn't be shocked.
One more announcement that Trump has made. Take a listen to this. He did mention that Bitcoin could reach gold's market cap. Just like to get your thoughts on this.
Steel industry of 100 years ago really is. I think you're just in your infancy. I can see it happening. In just 15 years, Bitcoin has gone from merely an idea posted anonymously on an internet message board to being the 9th most valuable asset anywhere in the world. Can you believe that? Is that right? That's a big deal. Think of that. It's already bigger than ExxonMobil. Soon it will be surpassing the entire market cap of silver. And one day it probably will overtake gold. But based on the way it's going now, it could very well be a possibility. There's never been anything like it. And I don't think you've ever seen anything.
Can you just address that? One day it may surpass the market cap of gold. Do you agree?
He may very well be right. I think there are a lot of similarities between Bitcoin and gold. Obviously Bitcoin doesn't have the history that gold has, but Bitcoin is the new kid on the block. You could see that happening. I do think you hear some arguments, gold or Bitcoin. I don't think it's an either or. I think it's both. I think a lot of the forces that are impacting Bitcoin right now also apply to gold, meaning, flight away from fiat currency. We just filed for 100% crypto and 100% gold and silver ETF because I think the combination of those two things are something that ought to be in a portfolio.
So Bitcoin's market cap is currently $2 trillion. I'm looking at the price today. Gold's market cap, depending on whichever day you're looking at, is somewhere around $12 to $14 trillion, depending on what source you're looking at. So let's say about $12-14 trillion. That implies a 6x price. That implies $600,000 of Bitcoin, $500,000 to $600,000 to equal gold. So, like you said earlier, it's not going to come overnight.
No, I don't think we'll get there tomorrow.
Yeah.
But within the next few years, if something like that happens, again, I'm not going to be surprised.
That would imply what? That more people are using Bitcoin as a medium of exchange, that more countries have adopted it as a strategic reserve, or none of these things have to happen?
I would think so, yeah. I think that the usage, the adoption has got to obviously get stronger. I mean, it still comes down to supply and demand.
What do you think are the pieces of adoption or levels of adoption that are exciting for you for Bitcoin? In other words, what's next for Bitcoin adoption that we should be looking forward to?
I think the big ones are the central banks getting involved and companies getting involved from a standpoint of, part or more than part of their corporate treasury into Bitcoin. You're already having people listing off, hey, these are the companies that invest in Bitcoin. And a lot of times those stocks go up just because of that. So I think those are the big catalysts. I do think individual investors are going to be more and more comfortable, especially now that there are ETFs, because, again, old people like me, I have no problem buying an ETF. And you'll see, the big brokers, the financial advisors. You're just going to see more and more adoption across the board.
Well, why wouldn't you buy spot Bitcoin?
For me, I'm going to be 56 in 2 weeks. I grew up trading stocks and mutual funds. I gravitated towards ETFs. It's just, you're not going to teach an old dog new tricks. I don't know anything about crypto exchanges or cold wallets. I don't want a password protected thing. Yeah. On the other hand, one of my traders is 28. He's been buying Bitcoin and other cryptos for like 10 years. That's what he grew up doing. He's totally comfortable with that. I like ETFs and I like options on ETFs. It's just my comfort level, and I'm too old to learn something new.
So take a look at my screen once more. We have here news that Russia may be considering a Bitcoin strategic reserve as well. I'll just read you this article. A leak reveals Russia's bid for Bitcoin strategic reserve amid huge 2025 price predictions. So, Russia's state-owned domestic news, RIA Novosti, reported that State Duma Deputy Anton Tachev has proposed creating a Russian strategic Bitcoin strategic reserve, claiming to have obtained a copy of the document. What's the incentive for Russia to do this?
Yeah, it's same incentive as it is for us and other places. Diversification of where you're holding your cash. Bitcoin has now become an asset class that I just don't think you can ignore anymore. And it's interesting. I saw Michael Saylor on a podcast, and I'm paraphrasing, but he said something along the lines of, at first you're skeptical, then it's something that you decide you're going to trade, and then you decide it's something you're going to own. And I went through that personally when Bitcoin came out. I wish I could say, hey, I saw this coming early. No, I said I don't understand why this isn't one or why this isn't zero. Then I went and started trading it, and now it's something that I own. It's a core holding. I think central banks are looking at that the exact same way.
So, if we were to take a look at what BlackRock said, they recommended that Bitcoin should comprise 1 to 2% of traditional investment portfolios. That's comparing Bitcoin's risk profile to basically a Mag 7 stock. Do you agree with this assessment?
I think, again, everybody is different and everyone's tolerance for risk and all that. But, 1 to 2% of a portfolio doesn't really move the needle. I think, again, in an ETF, I'd be comfortable with 5% of your portfolio in Bitcoin. I think it has some diversification abilities where, you've got a day like today where obviously it would be helping you out. And it would have been helping you out the past couple of weeks when not a lot was working in this market. So, and again, I'm an ETF guy. I'd be comfortable with 5% in a Bitcoin ETF.
Well, what is Bitcoin for you as an investment? Is it a leverage play on tech stocks? Is it a safety asset? Is it a safe haven asset rather? Is it a counter dollar asset? Like, what do you use it for?
So for me, I focus, I teach people something I call the HEAT formula, which stands for hedges, edges, asymmetry, and themes. And I look at crypto, not just Bitcoin, but crypto itself as a theme. And what I'm looking at as far as themes go is not as much what's going on today, but what's going to be going on in the future. And I think crypto is a powerful theme now and going forward for the foreseeable future. And I believe that when you're designing a portfolio, you want a collection of the most powerful themes, which is why I think crypto belongs in a portfolio.
Is it like a tech play for you, like an emerging technology? When you say theme, like what do you mean by that?
Yeah, I mean, I think it is an emerging technology, but it's different. I look at like AI and quantum computing more as emerging technologies. Crypto is almost an emerging way of commerce, maybe is a different way to think about it. So, I think the term technology is not broad enough because crypto is something that's entirely different.
Let's talk about tech stocks then. Good segue. I mean, how would you compare Bitcoin to, let's say, one of the Mag 7 stocks in its use case for a portfolio manager?
So I would look at crypto as something that's different. So crypto belongs in the portfolio. So don't, I think, all of the Magnificent Seven stocks as well, but they don't necessarily belong in the portfolio because of their Magnificent Seven. They belong in your portfolio because I think they represent the big players in AI, and from Google's standpoint, the big player in and NVIDIA as well, a big player in quantum computing. And I think AI and quantum computing are the two big transformative technology themes that you want to be invested in your portfolio.
For anybody's portfolio or specifically tech investors?
So I think for anybody's portfolio,
Okay.
I think anybody now, again, percentages
Yeah.
and and how you do that is different, but I think you want to be invested in the dominant themes. Why be invested in a restaurant stock when you could have Nvidia or you could have Google or Microsoft
Hmm.
or Apple. To me, though, those are the stocks that are going to define the future, not McDonald's. And I'm picking on McDonald's
Yeah.
as an example, but
So those will be the next value stocks of the future, or will they continue to be growth stocks?
no, always growth stocks. I am not a fan of value stocks. Every once in a while, you see a rotation to value, and people say, "Oh, this is the big." No, I mean, again, I think you want to focus on what is the future likely to hold, and you want to be in those names. I don't look at growth versus value. I look at, where are things going, and that's where I want to be.
Take a look at this piece of news. U.S. prepares new AI chip restrictions to close China's backdoor access. So the U.S. is preparing rules that would restrict the sale of advanced artificial intelligence chips in certain parts of the world in an attempt to limit China's ability to access them. Um, any changes to current rules that may change the way you invest in tech stocks and AI related stocks in particular? In other words, does this particular story have any impact on the investment landscape?
That story has no impact as far as I'm concerned. I mean, AI is, a massive movement that's not going to be stopped by anything. And you could argue maybe it should be. I mean, maybe it's going to kill us all, but there's so much money in it and what it can do. I mean, anyone who's gone on ChatGPT or Grok or I mean, the power is immense there. Nothing is going to stop it. Certainly things change my views from the standpoint of maybe the second order and the third order types of AI names. The nuclear news that came out a couple of months ago, I thought was extremely interesting. But this news doesn't impact me in any way, shape, or form.
But if the U.S. is restricting sales of chips to other countries that may then sell to China, let's say here it says the rules are aimed at China, but they threaten to create conflict between the U.S. and nations that may not want their purchases of chips micromanaged from Washington. Would that not cause a sell-off of American chip stocks? Because then you're looking at investors looking at countries that don't have restrictions.
I mean, it could in the short term, and I'd use that as buying opportunities. I mean, a stock like ASML, every once in a while sells off on China news. And typically,
Yeah.
whenever it does, I buy more of it because ASML's product you need to make AI work. So, for me, I'm going to take advantage of those types of sell-offs. We're going to see an AI arms race, like we saw a nuclear arms race, because whoever takes the lead in AI is going to have an extreme strategic advantage. So, stuff like this, I expect if we're in a nuclear arms race, we're not going to be giving nuclear technology to Russia and China, nor are we going to be giving them AI technology, but they got smart people there.
Well, what's your view on the tech sector overall? Is 2025 another year of growth for tech?
So I think so. You've got a Fed who I think is still behind the curve, which is one of the reasons why I like gold and crypto. But they're going to be accommodative to the market. Don't fight the Fed, I think is timeless investment wisdom. I think you've got a president who's going to help support a lot of this stuff, especially in the AI field. So, barring something coming out of left field, this to me feels like another good year for tech stocks.
Good year on the same scale as 2024 or less growth?
I could definitely see it on the same scale as 2024. You've got new things coming out now with quantum computing,
Yeah.
which again is a few years away, but that doesn't mean those stocks don't start moving. I could see it just as good.
What's the play for quantum computing? Are we investing in particularly in computing stocks? Sorry, or computer stocks in particular, or chip stocks? Like what? How do we play that theme?
So the main players are your Googles, your IBMs, your IonQs, your Rigettis, names like that. And then, a lot of the secondary names are going to be the same names that are providing infrastructure to AI.
Tell us about your fund and your strategies around your investments.
So, I am myself a trader. Again, we teach people the concept of the H.E.A.T portfolio, which is how I manage my own money. So I like to come up with thematic ETFs based on themes that I think are going to be powerful going forward. So, whether that's AI stocks, in under talked about or not talked about at all theme I love is self-defense stocks. Another one I love is European aerospace and defense. So we try to come up with themes that are kind of below the radar screen that not everybody is talking about. And I try to design ETFs that I'd want to trade myself.
Can you tell us more about this this H.E.A.T philosophy that you mentioned?
Yeah. So again, it's hedges, edges, asymmetry, and themes. So first off, I believe you should always have hedges. Market doesn't go up in a straight line. I'm personally agnostic between being long and short. I've always got short positions in my portfolio. I'm never 100% long. You should always look for edges. Those could be structural edges, where maybe there are products that are designed poorly or designed really, really well. And they could be edges based on some sort of strategy. Like, for example, mean reversion strategies like RSI have historically provided an edge. Asymmetry means you should set your portfolio up for asymmetric returns, meaning heads I win a lot, tails I lose a little. And every trade you make should be set up that way. Heads I win a lot, tails I lose a little. And then themes, again, we've talked about, you should be positioned in the major investment themes.
Right. How do you hedge? Options, puts, or perhaps?
I'm an option guy. So I like to buy puts on structurally broken ETFs. So, there's a natural gas ETF that, structurally is not set up well, UNG. I own puts on that a lot. I also like to buy puts on high flying stocks that end up breaking below support levels. So, those are the things I like to do. And occasionally I will buy calls on VIX, the volatility index. Most of the time I have puts on the VIX exchange traded products because they're also structurally broken.
Do you believe in assets that move counter to each other as hedges naturally?
Not really, because, like the traditional relationship is stocks and bonds, but they don't always move in opposite directions of each other. And there are years like 2022, they both went down at the same time.
Right.
So I much prefer being long the major themes and being short things that have gone up too far too fast.
Well, that's a good point, because generally when things move down together very quickly, like in a fire sale situation or when there's periods of extreme volatility, the correlation coefficient tends to converge to 1, meaning everything moves down together. So what do you do in that situation?
That's where you've got puts on high-flying stocks that when the market does go down, those stocks get hit even more. And that you hope to offset a lot of your potential losses. The other thing I do is, again, I'm an options guy because those are asymmetric risk. Mm-hmm. And I also do a lot of structuring, and this is advanced, but there are ways to structure option trades where if you're wrong, you still break even. And if you're right, you still have unlimited upside. So I do some of that as well. And, and that's something I teach people.
When so just to clarify, do you buy options or do you write them?
I will do both. I will never write naked options.
Sure.
So I may do different types of spread trades, but I would never do a naked option trade. To me, that's picking up pennies in front of a steamroller. And for everyone who says they're making money hand over fist doing naked options, eventually they get carried out on a stretcher.
So if I buy a stock, let's say Apple, at the current price, and I want to protect that with a put, is it better that I but is it better that I buy a long dated put option with a strike price that's really different from the current spot price, or what do you usually do in that situation?
So in that situation, I'd be buying Apple calls. But if
Okay.
I owned stock and I wanted to buy a put, it would all depend. Like, sometimes you're looking at the market and you're nervous. So I'd buy a short dated put to just tide me over.
Mhm.
Or, you're staring at, hey, next week we've got a Fed meeting, we've got CPI, PPI, we got this announcement, and this announcement. I want an Apple put. And then once that's over, you get out of your put.
What are some of the common mistakes people make when they're buying or trading options in general? Because it is a very niche kind of trading style, and you have to be really glued into your screen 24/7, right?
Well, it again depends on your time horizon. So
Okay.
I'm mixing, and I believe in time horizon diversification. So there are core positions that I have long-term options on. And then there are trading positions. And the trading positions, I'm watching the charts and, but I'm not, and I used to have the time to do some day trading. I don't anymore. So, I'm more intermediate term swing trading. I'm a mean reversion guy. So I like to buy, something when it's down, not when it's, breaking out to new highs.
Yeah.
But you've got to have a philosophy. It's got to be a well thought out philosophy. You've got to have the time to be able to do it. And if you don't, you change it. So again, like I said, I used to do a fair amount of day trading. I was good at it, but I don't have time to do it anymore. So for me to try to, implement a day trading strategy today, it would go horribly wrong because again, I don't have time to do it. But I think time horizon diversification, position sizing.
Hmm.
The thing I love about options being asymmetric risk is I can come up with a dollar amount that if that goes to zero, I'm okay. But if you're saying, hey, Matt, I got a $50,000 portfolio, I'm putting 25,000 into this option, 25 into this, that's not asymmetrical risk. It's very easy to be wrong twice and your portfolio goes to zero.
And people commonly make these mistakes, or
People commonly make these mistakes, and also selling uncovered options. I mean, it looks like free money because it is 90% of the time. But when it isn't, that's when you get crushed.
well, let's say I see this a lot online as well. People are really committed on a position. Let's say they're really long Apple. Instead of just buying the stock, they'll buy a call option, or they'll buy several different call options of different strike prices and durations. But basically, they want leverage. What's your view on using call or puts as leverage?
So here's how I do that and what I teach in the Heat portfolio. So I use call options and put options as leverage, but 75 to 80% of my portfolio is in T-bills. So the rest of it, the options portfolio, I use to recreate however long I want to be and however short I want to be over an entire portfolio. That way, my maximum loss, assuming every single option trade, put, call, I put on goes to zero, is 20% because my T-bills aren't going to lose any money. And it's actually less than that because my T-bills are making 4.27, whatever they are right now, percent. So that's one way I structure a portfolio for asymmetric risk. And that's how I use the leverage of options.
Okay, great. Matthew, appreciate your talk. Where can we learn more from you and your strategies?
So our website is tuttlecap.com and, all sorts of information. You can sign up for our newsletter, the Heat Formula. I also try to post a lot on Twitter where I'm at Tuttle Capital.
Excellent. Thanks very much, Matthew. We'll put the links down below, and we'll see you next time. Take care.
All right. Thanks.
Happy holidays to all. Thanks for watching, and don't forget to like and subscribe.